What's up, investors? It's the Russian dude. Let's talk about one particular event which in the past have always accurately predicted the upcoming recession. And this event is the inversion yield curve between 2 and 10-year government bonds, which as soon as it reaches the positive territory, this is when in the near future the recession begins. This statistics is accurate from 1970s, it was working always in the past, and well, now looks like we are heading towards this positive territory once again. The very basic understanding of why this particular event happens is that whenever market participants, they think that something will happen, something bad will happen in the very near future, they decide to play safe. So they decide to sell their investments, they switch to more fixed income securities, and what can be safer than government bond and treasuries. And so by buying 2-year government bonds, they pretty much increase the price of these bonds, effectively decreasing the yield of the very same bonds. And in comparison, the longer ones, 10-year government bonds, they remain relatively the same. And so this creates this disbalance, the inverse curve goes in the opposite direction, and then whenever it reaches the positive territory, well, this is when, long story short, most market participants are expecting some bad things to happen in the very near future, definitely within 2-year time frame. Besides this, the economists have distinguished a full economic US cycle to be at approximately 18 years. Whenever something bad happens, whenever the markets are at their lowest point, then they start going up and then they start going down once again, reaching the very bottom, and well, once again between these two bottoms approximately 18 years should pass. The very last one was the greater financial crisis, approximately reaching its bottom around 2008. So well, 18 years from that date is 2026, 2 years from the moment of recording this video, once again confirming exactly this previously discussed inverse yield curve, that whenever people buy 2-year government bonds, well, as you can see, everything just matches unfortunately perfectly. And at this moment, some major financial institutions, such as for example JP Morgan, are estimating the risks of recession in the near future to be at approximately 35%. It is still below half, below 50%, but 35% is already a serious number. The Wall Street itself also sees right now at least 3 major risks to the stock market in the near future, with the major scare point being exactly the recession. Approximately 39% of those responded to the survey call recession as their biggest fear. The second place goes to geopolitics, what can destabilize the market, of approximately 25% of respondents being afraid of geopolitics the most. And the third place goes to inflation, with only 12% of people still afraid of it. Well, as you can see, it is relatively budging, so yes, the Federal Reserve is doing its job, which is by the way a significant decrease. Just several months ago, it was 20% of market participants who were afraid of the inflation. Another very interesting, and the thing that I don't think too many people are talking about, or I would say no one is even talking about this. Previously, the US has lifted some of the restrictions about selling the weapons and the related military equipment to the Saudi Arabia, because previously this country pulled a lot of billions of dollars out of the US economy, selling the treasuries and government bonds. And well, potentially one of the ways of America trying to raise additional capital and bring these billions of dollars back is to just try and satisfy some of its friends and mostly enemies. So they lift such restrictions, such as for example allowing the Saudi Arabia to purchase military related equipment once again, and well, the cash starts to inflow once again. But nevertheless, just in the last week alone, the US funds have seen the biggest cash outflow in the last 2 months, which equaled $8.92 billion. While this might not sound as significant numbers, and definitely most certainly they are not gonna trigger any recession or corrections. But the fact is the fact. Some people once again started to lock in their profits in fear of uncertainty of the near future. So let's see if this time the situation repeats itself and if this indicator of inverse yield curve of government bonds will be truthful, will be correct once again as it was since 1970s. So guys, please let me know down below in the comments whether you think the recession is gonna happen in the next 2 years or not. And as always, thank you so much for watching. Please like this video, subscribe to my channel, and see you tomorrow.